Hi, I'm Senator Mark Warner, and in the coming days, I believe the Senate is on the verge of passing major bipartisan legislation that I'm proud to have helped introduce. This bill is aimed at providing relief for small community banks and credit unions. The truth is, these Main Street banks are the groups that most part provide the loans to entrepreneurs. They provide small business loans. They do the vast majority of agricultural loans. And in many ways, small banks and credit unions have not been able to provide as much credit as they were in the past because in certain areas we got a little over the top in terms of regulations. Regulations that rightfully were intended for the big banks, and regulations that I'm very proud of as someone who was here in the Senate and one of the folks that helped put together the Dodd-Frank legislation. And I believe because of Dodd-Frank, we are in a much more safe and secure financial institution. But 10 years after the fact, there are areas where, to make sure that there is ability to have access to capital, particularly in smaller communities, we've got to make sure that community-based banks and credit unions that didn't cause the crisis a decade ago end up with a little bit of relief so they can get more loans out into the community. And that's what I hear all across Virginia. Over the years, this is an issue I've been working with Virginia's community banks and credit unions on how we can do some targeted relief. The truth is, 10 years ago, they didn't get bailouts from the taxpayers that the big banks got. And as mentioned, I'm very proud of the fact that 10 years ago, I was one of the authors of the Dodd-Frank legislation that put in new provisions on the largest Wall Street banks and ended in many ways the possibility of taxpayer bailouts. And our financial system is stronger because of that legislation. But there's always a time to come back and check and see if we can improve legislation that's been on the books now for a number of years. And I believe the legislation that will come up, that will, I hope, have broad bipartisan support, will provide that kind of targeted relief to community banks, credit unions, some regional banks, in a way that gets more lending out to entrepreneurs, small businesses, farmers that we desperately need. Access to capital, particularly in smaller communities, is one of the most important things to making sure that your community has economic prosperity. I believe this legislation that will be debated this week in the Senate will provide that kind of targeted relief. I'm proud to be a co-sponsor of it, and I look forward to the debate.
As a credit union, we have to adhere to the same regulations as large banks do, but we have to do it with a much smaller base. Again, we only have 10,000 members and 20 employees adhering to the same regulations that a behemoth like Bank of America has to apply to. I wish the federal government would understand that these one-size-fits-all regulations, they don't work for credit unions. They have to remember credit unions were formed to fill that gap that the larger established financial system was not serving. So we actually focus on the community. We understand.
In the rural areas, the larger institutions across the whole country have reduced their branches. The smaller banks have held their own, but we're operating with 2,000 less community banks a day than we were 12, 15 years ago. That's over 1/4 community banks are gone. And I think the primary reason for that is regulatory fatigue.
I think the community banks are the backbone of our country and many of our rural markets, and not just the rural markets, but I think we serve a vital role to the growth of the economy.
Every dollar that we spend on compliance or increased compliance really doesn't go to our capital, and that really, if we could put that extra dollar into our capital, we could lend it back out into the community on a tenfold basis. So our hope is that regulation can be decreased and that we are able to take that capital that we save and invest back in our communities.